Hey, what's up, guys? This is Sam, and I'll be doing the free video for Friday, September 10th, 2021. So the week just closed. It was a short week, but certainly a volatile one. And we actually closed with a red candle for the week. Very rare in this market that we see that, but it did close with a red candle there on the weekly chart. Now, one thing that I'd like to just talk to you about real quick. I won't get a chance to show it to you, but I'll just talk to you about it very quickly to start the video. Is I have this indicator that I came up with. I call it the high-low oscillator. Basically, it's kind of similar to like a ready aim fire if you're familiar with that. Kind of similar to like a slow stochastic or a stochastic in general if you're familiar with those indicators. Now, those indicators tend to top out at 100, right? The max reading is 100. Theoretically, it's 100. I've never personally seen a reading of 100, nor do I expect to, but the theoretical limit is 100, or the ceiling. On the high-low oscillator, on the monthly chart of SPY, the monthly chart, the reading right now to start the week was 99. So the rating on the monthly SPY was 99 out of 100. Now, again, that doesn't mean that there's problems, right? That just signifies a very strong market, but it does tell me that there's not a lot of meat left on that bone, right? Think of it like this: if somebody ate 99% of a meal, and then you had a chance to eat 1% of the meal, but if you choose to do so, it might cost you the whole meal, right? So I'll eat 99% of the meal. You can have the last 1%. If you eat the last 1%, you pay for the whole thing. Would you ever do that? Probably not, right? So there's not a lot of meat left on the bone. That's what that tells me. And then we actually saw some pretty good follow through. So instead of kind of showing you stock picks, because in this particular slice of time going into next week, I don't think that the stocks really are that relevant. It's like, oh, who cares what, you know, stock XYZ is doing? It's all about the market as a whole and the indices and VIX specifically. And then once you understand those things, then you can start looking at the individual stocks. So let me kind of just start here with SPY real quick, because I'm seeing just a couple of nominal problems that could become something a little bit bigger potentially. So the first one is right here. So you see how that you have this pullback low to that level right there, and it creates this low on the indicator, right? Now, this pullback here is much higher. See how the price has actually gone up. Now, we don't know that that's the bottom or not, but that is the current bottom going into next week. But do you see how if you project across, the momentum has actually gone lower? So even though you're at a higher price level at the moment, your momentum is worse than it was back here. And not only is it worse, but it hasn't reached the kind of capitulation levels at the bottom. So that's a little bit of an issue. You also have crossed negatively here on the daily trend oscillator. And you see the same dynamic here. You have this previous momentum low, and then you have this lower momentum low very near the highs, even though price has not pulled back anywhere near to back where it was when this initial low was printed right there. So little bit of a problem there. Also the weekly candle here, nice big bearish engulfing candle that kind of just eats up the last 2 weeks on pretty decent volume. Considering it's a 4-day week, that's actually very good volume. So not the best, healthiest look of the market, right? It doesn't, we've gotten so used to buy the dip, and maybe this is round, 503 of buy the dip. But this one seems different based on the indicators than each one before. So I can actually give you a pretty good level that I think is active here, and I'm going to give it to you on the Dow, and it's going to be this 100 period simple moving average right around 346. So I'm going to give you 346 as the over under on Dow. If it breaks 346 here, I see a huge air pocket to the downside, right? Because if it breaks this level here, which it has held there and then again here, and then also understanding that this level kind of overlaps with the previous lows. If it breaks 346 on a daily close, then more than likely you're going to have to drift all the way back down here and get down to about 337. So that'll be about a 900 point drop in the Dow, roughly. Now, why does this one seem different? Well, because your indicators have gone negative which they never do, right? So the indicators are negative, and not only are they negative, they're not exhausted. That's my problem with it, right? It's not so much, oh, we have a negative break in the indicators, time to throw out the baby with the bathwater. It is we have a negative break on the indicators, and they're nowhere near exhaustion to the downside. If they were near exhaustion, if this was closer to the floor, then I would be looking at this with a slightly different view, but they're not, right? So not only are you kind of breaking these lows, but you're doing so with an excessive amount of momentum and coil to the downside, right? So by the time that this gets down here, maybe to something like this level, although I need to see it over here on the daily, by the time it gets down there, then that'll be like it has like a parachute and kind of gently fall into the level. But as it sits right now, it's super coiled up and and kind of threatening to break a little bit. So I just finished making the premium video with the folks in the gold room, and everything that I'm seeing is kind of market wide. The best thing that I saw actually was the semiconductors. This one still held structure better than almost anything else in the market. Now, semiconductors are certainly risk on, but in terms of actually having held structure, everything took it on the chin. XLC, which has the best trend in the market, hit a major target. I'm going to show you that next before we sign off on the video. XLK, which is technology, got smacked and doesn't look like it's anywhere near exhaustion levels to the downside. XLV, which is healthcare, looks a little bit more consolidative, so it doesn't look like it's going to be really able to help out too much. And those are the best sectors in the market, right? XLC, XLV, XLK. One thing that did hold up relatively well, which I think if next Monday ends up, being bullish and kind of, this market does what it always does, even though this time looks different, but it does what it always does and just kind of manic, crazy high Monday and kind of starts to fix the charts with just a huge spike on Monday. Where I think makes a lot of sense to focus is actually the semiconductors, because on a day like today, where the market really got sold off, this still managed to hold almost a 1% gain. Right. So for myself, you can certainly choose a semiconductor, but I think just betting on the field with SMH is probably the best play. The one that I was playing today that I got out of already, but that I was in for like 2 days was Texas Instruments, TXN. I'm seeing setups across the board. AMAT had a setup. AMD is trying to develop a setup. NVIDIA is trying to develop a setup. But instead of choosing an individual stock, I think if you like the idea and if the market turns out to be bullish on Monday, then I think betting on the field on SMH makes the most amount of sense. So one quick bullish idea there for you, but I'm not coming at this market with a bullish point of view. If we go back over here to, let's say, the IWM, which is the small caps, they should have done relatively well today, or maybe they should have been the least bad of the bad things. And again, they led to the downside, right? Now, why do I say that they should have done better? Because interest rates were up today, which generally gives a gentle push towards a gentle bullish push on IWM, and is typically bearish on tech. But we didn't see that. We continued to see tech outperformance. So watch out with the IWM here. I think if you want to look for something short, I think this is your play, right? This one makes the most amount of sense because you have this weekly squeeze here, you have this giant weekly range, and there's a definite potential that this weekly squeeze could actually end up firing short. If it does, it would imply a move all the way back down to about 190 on IWM. So it's more than 10%. So it'd be definitely worth your time. So just two ideas for you real quick. But the main thing I want to stress to you guys watching on YouTube is just focus on the indices this week, right? And put your comments down in the, drop some comments down below. If you see things more bullishly than me, let me know why. Put it in a comment. If you see something that I don't see, let me know. And I'd love to see what you see here. But based on what I'm seeing, it looks like any bounces in this market are going to continue to be sold until these issues get resolved. In the event that we have a bullish Monday or just a bullish week, I'm keeping an open mind, but I'm going into it expecting a lot of selling. Then I want to play the semiconductors to the upside. And in the event that we break short, I still think that IWM offers you the most opportunity because even on a day where it should have traded relatively well compared to the other indices, it's still traded poorly. So when things should do well and they do poorly, then when things actually kind of fall out of bed, I would imagine that thing, in this case IWM or the small caps, would definitely continue to underperform the market. So just two ideas there for you: SMH long, IWM short. Kind of an interesting pair straight if you decided to pair those up and just do IWM short, SMH long. I'm kind of maybe selling myself on that idea. That sounds kind of interesting. Just kind of set it and forget it, walk away. But again, just have top caution next week, and whatever you do this weekend in terms of your own preparation to get ready, make sure that you focus on the indices, unless you're just trading something that's completely off the beaten path, like AMC or the meme stocks or something like that. Well, then it's not as relevant. But if you're trading anything that's relevant, like Google, Amazon, Apple, Tesla, any of the big ones, then you really will have to spend some time working on the indices this weekend. And if you find something that looks bullish, again, we try to work together as a team here. Drop it in the comments. Let me know what you see, and I'll see if I can see the same thing. But for now, I'm kind of going into next week expecting any pops to be sold into, pretty much potentially all the way into October. So that's kind of the bias, guys. Hope this was helpful. If you have a chance, come and check us out at simplertrading.com, and we'll see you for the next video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video. And before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.